Good morning, friends. Welcome to the Saturday knowledge sharing webinar organized by Mehta and Mehta Knowledge Foundation, a non-profit organization which Mehta and Mehta have. Friends, please note that we are also having a webinar series once in a month for the topic on ESG, BRSR, CSR, and IBC. That is for information of our participants. So today's topic of discussion is provisions of the Audit Committee. Audit Committee, friends, under Companies Act 1956 also we had, and it had its own importance that time. But over the period, its roles, responsibilities evolved, and it has take importance in different way. In board, there are many committees. There are many committees of the board. But among that, comparatively, we can say each each committee has its own functions and roles and responsibility. But comparatively, audit committee has more role to perform, and the expectations of different stakeholders is increased from the audit committee. The expectation that the audit committee, perform its functions and duty with due care, diligence, is increased not only from the regulator and the shareholders, but also other stakeholders like prospective investors, prospective vendors, strategic partners, etc. And in view of that, the composition of audit committee requirement is provided that way. I know all the participants will have so many questions. And today's our topic we have selected for that reason that we will have more practical discussions on the topic rather than because legal provisions are known, but of course that will be gone through, but our stress will be on the practical aspect. And we have with us our experienced panelist, Ms. Vallari Gupte, the company secretary of Skoda Auto Volkswagen India Private Limited. Welcome, Vallari. You are there earlier. Thanks for time. And friends, she is enthused to share her knowledge and experience with the participants. To formally introduce Vallari, CS Vallari Gupta is a commerce and law graduate from the University of Pune, a fellow member of ICSI and ACIs from Chartered Governance Institute, UK. She has qualified diploma in corporate governance by the ICSI, as well as certification in global reporting initiative standards by GRI Institute of Sustainability Reporting. She is a certified mediator and registered independent director in the database of ISCA. She has recently joined as a company secretary of Skoda Auto Volkswagen India, before which she worked with CEAT Limited, where she was a member of ESG Council and CSR Task Force, responsible for the sustainability integrated reporting, and also led the Center of Excellence for Legal and Secretarial Functions of RPG Group of Companies. With total post-qualification experience of over 20 years, she has worked in the corporate secretarial and legal functions of various MNCs and listed companies like Bajaj, Tech Mahindra, and other Thermex, etc. She is actively associated with CS Institute. She was invited as a panelist at the 50th Golden Jubilee National Convention of ICSI 2022. She was previously member chairperson of Samhita Subcommittee of Pune chapter and currently speaker and faculty member at various seminars, webinars organized by ICSI on the subjects like ESG, C corporate governance, SEBI LODR, etc. She has been recognized as a successful company secretary under 40 under the Empowered Woman Drive of the occasion of Women's Day in the year 2020. She is also passionate about social initiative and works in association with several non-profit organizations like Vips, Thumb, Netra, New Leaf Foundation, etc. Welcome, Vallari. Thanks a lot for your time.
Thank you, ma'am. Thank you so much.
And today's our presenter is Ms. Sakshi Gupta. Sakshi is associate member of ICSI and she is a commerce graduate. She has worked with MCX and she has experience in corporate law and LODR and also worked on the NBFC's compliances. She is a partner of our Jaipur branch. And with this, our other panelists, we know Mr. Sudhakar Sarvatula and Bala. Welcome both to share your knowledge and experience. And with this, I'll request Valerie to say a few words on the topic, then Sudhakar and Bala, and then Sakshi, you can start the presentation. There will be a lot of questions, and I'll stress first question only, though we have answered our clients. But many times the question is that if a top any subject is to be placed before audit committee, it is not placed, but it is placed before board, complete board. So whether it is compliance or non-compliance. With this, I'll request Valerie to start, say a few words on that. Over to Valerie. Thank you.
Thank you, ma'am. And once again, good morning, all the participants. And thank you, ma'am. Thank you, sir, everyone, for considering me for this Saturday knowledge sharing webinar. It's not just the first time I've been here before, and it's a great initiative. I always like to participate, like to both participate as a panelist or even as otherwise attending for knowledge gain. Today's topic, I truly appreciate that because the way these webinars or the knowledge sharing is conducted is the smaller nuances are also taken into consideration. So as ma'am said that audit committee is very well important. And we have seen that not just today, I think it's way back almost about 20, 25 years ago when the entire concept of corporate governance was introduced and the role of board of directors, independent directors was identified. In terms of protecting the public funds and how exactly the directors can exercise their fiduciary duties, be very much mindful about the operations of the organization, and that's where the role of independent directors also comes into play. But as comparatively against the other committees, audit committee will certainly have more role to play. And if we would see that the initial role of the audit committee was probably restricted to the financial statements, now over the period it has evolved. Most important is certainly approving the related party transactions. That's a key area that we also understand. But apart from that, not just the financial transactions, but there could be audit findings, discussions with internal auditors, also now overviewing the PIT compliances. So the role of audit committee is widening, and it's very much important that the directors understand the compliances, their role, the seriousness or the gravity of the committee, and take their position in supporting the business at the same time maintaining the interest of all the smaller shareholders. So this, I think, is a crucial role of audit committee. Sakshi will be here to present the details, and we will all be discussing on various points and the questions. So I will rather request the other panelist, ma'am, to further discuss. And I think then we could take the questions because once the presentation starts, I think most of the points will get clarified in the presentation, I feel. So over to you, ma'am. Thank you so much.
And you can see the questions have started only already before even we start presentation. Yeah, over to Sudhakar. Meanwhile, Sakshi, you start sharing the screen so we can save the time. Yeah, over to Sudhakar, please.
Namaste, everyone. Good morning. And the topic what we are going to discuss with is an insight into the provisions of the audit committee. In fact, two, three of my friends called me and they said that why you are taking up this audit committee topic. Two, three reasons for this. Number one, we are around the what's the annual closings. So audit committee has to play a very key role. What Deepti and Vallari has emphasized about the integrity and accuracy of the financial statements, as well as the accounting policies, compliance with accounting standards, audit and significant transactions. So many things are there. The audit committee has to play a very crucial role in the month of April as well as May. But I am going to discuss a few issues that when we talk about the role and responsibilities of the audit committee, it is also increasingly becoming important for the company secretaries to play a very key role for constitution of the audit committees. Because unless until the audit committee is constituted properly and the members of the audit committee have the requisite skill sets to discharge their responsibilities, it will not be possible for the audit committee to to ensure whatever the expectations of the stakeholders are there on them. Sometimes I have also been told that our board is not having enough members who can play a key role in the audit committee because most of them are technocrats or maybe professionals other than the commercial, like chartered accountants or company secretaries or like something like that. Even if you have the people who are qualified chartered accountants and company secretaries, still they may not be understanding their role as audit committee members, how the regulator is expecting them to play. So in the listing regulations, we have provisions for the induction of the director, independent directors especially, and the training aspects of the board of directors, which is also to be published in the annual reports. Unfortunately, there is no induction of the members of the committees, whether it is an audit committee, whether it is an NRC committee or other risk management committee, and so on and so forth. Unless until we have the what's called the induction properly in the appropriate committees, and they have to have a clear understanding of the role of the respective committees, how they will be able to discharge that. In fact, when I go as a faculty to Institute of Directors, several times I asked some directors who are already there on the boards, do you have, which are the committees you are serving? And at the time of your, what's called as, okay, you are appointed as a member of that committee, have you been told what are the terms of reference by the committee or by the board, by the company secretary? The answer was in negation. This is very unfortunate. So whenever you are constituting the board, that point of time itself, one has to keep in mind the requisite skill sets for these necessary the other committees also. Accordingly, you have to constitute the board. And then you have to put the members who are having those skill sets in the members of the respective committees. After that, the proper induction should take place of the members of these committees. Then they have to be properly trained. Then they have to be told about the terms of reference of the committees. In fact, whenever you are constituting the committee or reconstituting any of the committees, please ensure that the terms of reference is also becoming a part of your minutes. Because whenever a question comes that what is the terms of reference of this committee, sometimes it may be under the Companies Act, it is there under the listing regulations, but board is well within its rights over and above that also to assign certain responsibilities to the respective committees. So those are to be clearly spelled out as a part of the minutes. After that, what are the rights? What is the empowerment of the respective committees are to be told the members whether they have a right to take any outside expert's opinion anywhere or not, whether they can incur that cost. These things are also to be told about that. So what I will do, I will give a pause here because in the introductory remarks should not go a long. But wherever it is there, I am going to deal with a lot of practical aspects other than the legal aspects. Vallari will and Bala will maybe dealing with the legal aspects. But I try and I request Vallari also with her experience, wherever the practicalities are there, because let us discuss more of the practical issues. Of course, I have seen already in the chat box, the people are talking about certain investment bank and other governance related issues. Even DEFRA also is raising a lot of questions about the audit committee as well as the auditors. Let us discuss those issues. Gaurav, please take it forward. Thank you.
Good morning to you. We heard a lot of things from both the panelists on that. Only thing is, as Dipti puts it very clearly, I worked with the 1956 Act. We had an audit committee, we had an NRC committee. But looking at the sea change, the responsibility, the performance, the duties, everything is actually enlarged in many, many folds. Especially probably the audit committee, when we are talking, it was only a financial, it is not only a financial. It is, I think, a direct impact from the Sarbanes Act, which recognizes of the Enron debacle, increased multi-floor, the auditor's responsibility, non-audited services, independent auditor requirement, all those things which has actually come, the audit committee has got the greater role. Because ultimately what happens is the information disseminated to the market is via financial statements. The financial reports, the board reports, and in case of the listed companies, corporate governance report, everything goes ultimately, the information is actually disseminated to the market. So the right information goes to the market. There is a responsibility there in the audit committee in terms of the financial. And then the auditor, independence, non-audited services, etc. Coupled with that, now under the LODR regulation, as Sudhakar puts it, related party transaction. In fact, in LODR, it says related party transactions are required to be approved only by the independent directors. Whereas in the Companies Act, it is approved by the audit committee. So those sort of the things are there. Many, many things are there. Really, this audit committee is one of the very, very important committee out of the all committees. I think as Sudhakar puts it, today we will discuss most of the practical aspects. And another thing is there, Valerie has been in the group of LODR amendment regulation which came out, bringing the chapter 4 and chapter 5, which has been introduced for the high value debt securities things. And if she'll have a lot of things to share about it, about the audit committee and its role, I really hope forward to learning more on things and enhance my knowledge. Same thing will be there. As usual, I request all the participants to put the questions on the chat box. As Valerie puts it, let us complete the presentation. We'll take the question because by the time the presentation is over, I think probably most of the questions which has been put will also get answered. And even the discussion also will take place and this will also get answered. Let us keep it that way. Over to Sakshi, please.
Good morning, everyone. So in today's topic, we are going to discuss about the various provisions of Audit Committee under Companies Act 2013 and SEBI LODR regulations. And to start with, I'll just start with like Audit Committee is considered as the pillar of corporate governance. And we will, through this webinar, we will understand how and why that corporate governance can be achieved through the functionalities of Audit Committee in a company. So as we all know, Audit Committee is a subgroup of the company's board of directors, which is responsible for majority times, which is responsible for the overseeing financial reporting systems and the internal control systems in a company and audit related activities. However, it plays a major and a very important role in the related party transactions of the company. Its approval, its modifications and everything, we will going to discuss that in detail in our webinar. All the constitutions, powers and functions of the audit committee are governed by section 177 of the Companies Act 2013 and regulation 18 of SEBI LODR regulations. These regulatory provisions would be applicable to the listed entity and high value debt listed entity. To begin with, we will understand the applicability of the audit committee, which is applicable to all the listed entities. The public companies having paid up capital of 10 crore or more, turnover of 100 crore or more, or outstanding loans, debentures and deposits exceeding 50 crores of rupees. Then only public companies are required to constitute audit committee as per Companies Act 2013. However, the requirement of audit committee is not applicable on the private limited companies and the unlisted public companies, which is a joint venture or a wholly owned subsidiary or a dormant company. Certain times in a situations, sectoral regulations may require the constitution of audit committee by the private limited entities as well. That needs to be adhered to as per those regulations. Because in this webinar, majority of times we are covering only Companies Act 2013 and SEBI LODR regulations.
There is one question on that topic only.
Sakshi,
Yes,
Sakshi,
sir.
one minute, go to the previous slide, please.
Yeah.
See, that sometimes a question comes that there are certain committees, certain entities that don't need to constitute the audit committee, like exceptions what Sakshi has mentioned about private limited companies and certain listed public companies which are there like joint venture, wholly owned subsidiaries and dormant companies. The question comes that the terms of reference what is given to the audit committees, in these companies, who will discharge those responsibilities? Whenever the purpose of the constituting the committees is normally they will take a deep dive into that, and board cannot do each and everything. That is the purpose of constituting these committees. Why these exemptions have been given is because considering those companies, mostly they are small size companies or private companies, even joint venture companies, most of the time they are private companies. So in these cases, it is the board which has to step in and take care of those responsibilities. It is not like that no one will look into those aspects. Wherever the committees are not constituted, it is always the board which has to take the onus of responsibility and the ownership for this. Respect to the terms which are been referred to these committees. Number one. Number two, the same point of time, legally it may not be mandatory. But as a good governance point of view, the board can take initiative and constitute these committees. And wherever you are voluntarily constituting these committees, please ensure that you have to comply with the terms of complies with the provisions of the sections of the companies, respective sections of the Companies Act. You cannot say that I am constituting it voluntarily, so I will run the committees the way I want to have it. No. Regulators are always taking a view that once you constitute any committee voluntarily, you have to comply with those respective provisions of the. Yeah. Go
Yes,
ahead.
rightly you mentioned that many times as regards composition and constitution, which you rightly mentioned about that earlier, the kind of uh, member and awareness. We always request the board that if you constitute audit committee with a very competent, experienced members, it will really help you as your burden will be get reduced as a board, and they will give you intelligent guidance, and that guidance and their suggestions will be really helpful to you for the compliance and governance. So this is really right more that voluntarily you constitute, that will help on it. Thank you.
See, in fact, what is the purpose? Why the regulators are expecting them to comply with the provisions is you cannot deceive the public. The moment you say that I have constituted these committees, means that public knowledge always that okay, the committees are there, they will take care of certain aspects. But actually, you are committed, you have voluntarily constituted those committees, but those committees are not functioning the way they are expected to function. That is the reason that even if you are constituting the committees voluntarily, mandatorily you have to comply with the respective provisions. Yeah.
Rightly said, sir. And just to add, you said that the committee is to deep dive into the specific topics. It is also to add the 4I principle, where it is not just the board, but there is an additional check and a detailed check rather by the audit committee, and hence the role is very much important.
So we will understand the composition of the audit committee here. So it is governed under two acts, right? Companies Act 2013, which is applicable on unlisted public companies and listed entities. However, there are certain extra requirements which is to be followed by only listed entities under SEBI LODR. So it says that Companies Act requires minimum three members in an audit committee, which has to be the directors. Similarly, same is required under the company's SEBI LODR regulations. However, Companies Act says that the majority of the directors shall be the independent directors. However, the LODR says that two-thirds members of the audit committees are required to be the independent directors. The majority of the members of the audit committee, including the chairperson, shall be the person with the ability to read, write, understand the financial statements of the company. However, the LODR makes it more stringent, which says that all the members of the audit committee are required to be financially literate, and at least one member shall have the accounting or financial management related expertise. In the LODR, it says that the chairperson can only be the independent director. However, the companies which have the SR equity shares listed, it requires the audit committee members only to be the independent directors. Now, to understand what does the financially literate refers to, which refers to the ability to read, understand the basic financial statements of any company, which refers to only balance sheet, profit and loss account, and the statement of cash flows, which does not require you to have a professional degree or a diploma in the feel to understand the financial statements. However, you should be able to understand how the provisions are flowing, how the balance sheet is being prepared. However, to have the expertise in the financial management or the accountant and the financial management related expertise, for that, the act itself says that the person should possess the experience in the finance or accounting domain or may have a professional or a professional certification in that particular area. So you want
In
to
fact, I
explain?
suggest,
Huh.
sorry, Vallari, please go ahead.
No, I was just saying that it's very much important to understand the financial statements or to have members who understand these. But beyond that, I think they need to also understand the business because then only they can know the nuances of what kind of transactions, what kind of questions they can pose to the auditors or to the management to understand the maybe fairness of the financials as well as probably details in the in all the information that is being placed before them.
Yeah, absolutely. You hit the nail. In fact, Vallari, I was about to say that the audit committee members have to have the fair amount of knowledge as far as the business operations are concerned. Then only they will be able to appreciate the integrity and accuracy of the financial statements. Number one. Number two, the audit committee members have to be also given a kind of a training. This is what my request and advice to all the participants is. Please ensure one training session, if not more, in a year about the financial literacy of the audit members or audit committee members are concerned. How to read the financial statements, how to prepare the financial statements. In the, some accounting standards which are very important, which are connected to that particular financial statements of that particular company. What are the accounting policies of the company as such? In case any deviations takes place, why the deviations have taken place, what is the financial impact of that? No doubt about it, whenever you take the deviations of accounting policies or accounting standards are there, you have to give that necessary information in the financial statements. But why such deviations have taken place and what kind of a financial impact it has on the business? Maybe that whenever you are taking the deviation, first year there may be a negative impact, but in the coming years there may be a kind of positive impact. So this needs to be clearly informed to the audit committee members. So the what's called as the vitality and the vigor of the audit committee entirely depends upon the information what is fed to the audit committee by the management of the company. Management should never be shy of feeding the information to the audit committee is concerned. Yeah.
Sir, one more point I could add, and this is again a practical aspect, keeping in mind the good governance practices. It is always advisable that every probably 3 years or 4 years, there should be one addition to the audit committee constitution so that there is always a continuity, a succession in the audit committee, overall process discussions, and the management understanding. So when the business understanding is required, I think this kind of a practice, if it is introduced by companies, because anyways, the independent directors may have a tenure of 5 years, maximum 10 years. But if you add one member at least after 3 to 4 years, then there is some addition in the succession that can be ensured. So as a good governance practice, this can be considered.
Yeah, sometimes you may reshuffle the members of the committees also. In fact, wherever it is not possible to reshuffle, at least invite the other independent directors who are not members of those committees at least once in a year. Let them come and see the proceedings of those respective committees. Say, for example, I am an independent director of your company and I am a member of the audit committee, but I have no idea about how the NRC committee is functioning. No doubt about it, the minutes are coming to me. Sometimes that you may invite me to the NRC committee also so that I can interact with those members. This is how the committees will function in coherence and in alignment with each other. RMC, that the risk management committee members, audit committee members, to a large extent, the overlap functions are there. Same is the case with audit committee as well as NRC is there. Say, suppose CFO appointment, audit committee has to look into. Internal auditor appointment, audit committee has to look into. At the same point of time, these two appointments are to be looked into by NRC also. So the compatibility between the committees, the coherence between the committees, the alignment between the committees is very, very important. You rightly said that it is advisable to reshuffle the committees at least once in 3 years also. Yeah.
So, Dagar, you also touched upon the very right point, providing the necessary training to the audit committee. The organization where I was working, what we used to do, one full day, we used to keep a separate audit committee meeting where the outside experts were invited. And especially you may be knowing, one of the time, the accounting standards are being introduced left and right, starting from number 10 to number 33. Many people were not even prepared for that. What is this, our preparedness and other things and all. We used to get those people, we used to analyze, we used to go through, we used to provide the knowledge to the audit committee members in order to understand what are the accounting standards applicable, what should be our preparedness, the presentation, the methodology, and other things, and all these things we used to do. It is a good idea to have an expert and have a training, necessary, especially the way the amendments which are all taking place from right and left, is especially from the listed companies' point of view, LODR regulation. That will be a good idea to give them the literacy knowledge. Yeah. Yes, go ahead, Sakshi.
With this, sir, even I would like to add that with the requirement of the financial literacy and all this, this is directly linked to the board diversity. That a company needs to, we have a diversified board. In case of it's a IT related company, they cannot have only IT related people on the board. They need to have someone with the financial knowledge and someone with the other HR knowledges as well for the functioning of the company. So,
Yeah, well said.
for the quorum of the company, so the audit committee, it requires either two members or one third of the members of the committee, whichever is greater, with at least two independent directors present in the committee. And the number of the meetings in a financial year is required as the four times committee is required to meet at least, which not more than 120 days gap between the two meetings. Now we will go under the roles and responsibilities. I think this is one of the very important aspect of the audit committee. What is the roles and responsibilities and how should they they should be able to perform their roles and responsibilities. So the majority of times the roles and responsibilities of the audit committee is linked to the financial statements, linked to the appointment remuneration, terms of the appointment of the auditors, the review of the auditor's independence in the performance, how the if the audit has been performed effectively or not, that has to be reviewed and monitored by audit committee. They are required to examine the financial statements and the auditor report of the company. Audit committee plays a very important role in the approval and the subsequent modifications in the related party transactions of the company. If there is any intercorporate loans and the investments in a company, that needs to be scrutinized by the audit committee members. If any assets are there, its valuations of those assets or undertakings needs to be done through audit committee if it is required. Internal financial controls and the risk management systems needs to be evaluated by the audit committee. And the end use of the funds raised through the public offers and the related matters needs to be monitored by audit committee of the company.
See, especially when you are appointing the auditors, it is the responsibility of the audit committee to ensure the size of the audit firm and the team composition and their experience in auditing that kind of businesses also. Say, for example, if Reliance Industries is there, which is into oil and gas and into the refinery, obviously the audit team has to have the experience in that particular sector. Similarly, insurance companies, NBFC companies, telecom companies. So whoever is the auditors, it is not the question of the image of the firm only. Image of the firm is one of the aspects, but the experience of the firm, expertise is required. And of course, the cost also. Okay, so cost aspect should not be the criteria. The image of the audit firm is not only the criteria. While appointing the auditors, the experience and expertise of the auditor is also equally important. And I always advise that if you have a good auditor, definitely he will cause you the pain. Pleasure is in store for the long term. If you are having a pleasure in the short term, the pain will be there in the long term. So while choosing whether it is a secretarial auditor or whether it is a statutory auditor, whether it is a cost auditor, always ensure that your good auditors audit form should be there. And if they are being, properly constituted, they should be able to call a spade a spade. Yeah.
Now, under SEBI LODR, the roles and responsibility of audit committee has been elaborated. These roles and responsibilities are applicable only on the listed entities, which are required to have audit committee under the regulations. So, along with the previous discussed roles and responsibilities, they are required to, audit committee members are required to oversight the company's financial reporting process and the disclosures norms in the financial information, which is very important. Any payment which has been given to statutory auditors, that needs to be approved through audit committee. Any report which has been submitted to the board for the approval, this has to go through the route of audit committee only. This needs to be reviewed by audit committee and then recommended by audit committee to the board for their approval, which includes many disclosures, which has been mentioned over here. We have already discussed this in our previous webinars in detail, so we will rather discuss on the practical aspects of this.
Yeah, if I can add a few pointers here, and practically as the terms of reference kind of drive the discussions of audit committee or the scope of audit committee, they do have additional authority to maybe call out for further information, take out matters which are important in terms of taking reviews of financial statements or other relevant matters. So what practically I have seen is that in a year, there are typically 5 audit committee meetings which are held, the 4 for quarterly results and 1 around the month of March, which takes care of the other matters, the overall annual reviews, maybe even the omnibus approval of related party transactions. But apart from that, even the audit committees meet the auditors separately, apart from the executives or the other management in the discussion. Also, I've seen the audit committee meeting the internal auditors separately, because that's how they can get the insights of the matters which are happening, the key findings that the internal auditors may have, or even one of the terms says that the effectiveness of the audit process has to be evaluated. So all this is the responsibility of the audit committee and not necessarily carried out at the audit committee meetings. They have the freedom to call out separate meetings to discuss this independently with either the internal auditors or the statutory auditors as may be required. And as a good governance practice, again, the companies can have a checklist of all these terms of reference and at the year end ensure that if there were matters relating to any of these areas, have they been placed before the audit committee, have all the compliances been ensured. So this helps the company secretaries as well, and maybe educate the finance team also, that if there are matters with respect to these areas that the audit committee needs to deal with, these are placed before the audit committee as and when required.
In fact, one more thing also, when we are talking about the financial statements, some directors told me that their company secretaries, they don't circulate the quarterly financials or the year-end financials to them well in time, because that is considered as unpublished price sensitive information. They always give them only one day before or one night before kind of things. And how we can go through the financial statements in depth? That is one question always comes. And similarly, some people also say the audit committee meetings hardly take for 2 hours maximum. In this 2 hours, how can we discuss all these issues? My answer to that is that audit committee members are well within its rights to hold the meeting unless until that entire agenda is completed, whether it is 2 hours or 20 hours, it is immaterial. The audit committee chairman and the members are well within their rights to have that committee. And Vallari has rightly said that as far as number of meetings are concerned, minimum is 4, maximum depending upon the size and depending upon the dynamics of that particular business, whatever is required. And at the same point of time, now, as far as the financial statements are concerned, unpublished price sensitive information can be shared with the directors with a caveat that, look, this is a unpublished price sensitive information which should not be divulged to anyone and all those things. Make the necessary entries in the SDDs. It is not like that PIT regulations are prohibiting virtually communicating the UPSI with the directors. No, it is not so, number one. Number two, the companies can always do that. Whatever the sensitive information is there, you can blank that. Say, for example, the turnover figure, don't give it. The profitability figure, don't give it. Raw material consumption, don't give it. So with that, what happens is that at least other aspects of the financial statements are concerned, the audit committee can go through that. And similarly, the notes to accounts is the most important thing. Audit committee members should be able to have the ability to read not only the financial statements, but also the notes to accounts. In the notes to accounts, the information is, so several times it is camouflaged. That information, that camouflagation, the audit committee should be able to understand. They have to ensure that whether the proper dissemination of the information is taking place or not. That is equally important. So there, that I mean, notes to accounts, there is no kind of I mean, kind of a price sensitivity. If at all, if that price sensitivity is there, if the company feels or the management feels that this information should not be divulged at this initial stages, only at the board meeting they want to do it, maybe by that point of time they can blank it out also. But circulation of the financial statements along with the agenda is very, very important. Audit committee members should be given sufficient time to them. And before the audit committee meeting, even if that committee wants to informally talk to the statutory auditors without the presence of the CFO or the company people, they should be able to, I mean, okay, give that kind of an opportunity also. Yeah.
Then audit committee is required to review the quarterly financial statements, but here it is written with the management, which refers to that along with the management, people who has worked on the quarterly financial statements should be present in the audit committee to review the financial statements and deliberate on the same in detail, if the same is fine or not, before going to putting it same for the board for their approvals. Then along with the management, audit committee is required to review the application of the and or the use of the funds which has been raised by the company through either the public offer, right issue, preferential, anything, if the funds has been utilized properly or not. Then the performance of the statutory auditors and the internal auditors are required to be reviewed by the audit committee. The adequacy of internal audit function, if it is fine, it is working fine or not, is the responsibility of audit committee to review the same. They are required to do the discussions with the internal auditors if there is any significant findings in their reports. If there have been any internal investigations, the finding of the same has to be reviewed by the audit committee. As sir mentioned, ma'am mentioned that the statutory auditors before the audit committee are required to do the discussions with the audit committee to understand the scope of the audit, which needs to be, and if there is any area of concern that needs to be ascertained. If there is any defaults which has been made by the company in the payments to any of the depositors, debenture holders, or the shareholders, the reasons for the same needs to be looked into by the audit committee. Audit committee is also responsible to review the functioning of the whistleblower mechanism in the company. Appointment of the CFO of a company, its qualifications and everything needs to be approved through audit committee. It cannot directly go through the board. If above or then all these things, if the company wishes that the audit committee needs to do more responsibilities have to fulfill by audit committee, they can put it in their terms of reference. Also, if there is any loans or advances by the holding company in the subsidiary, the utilization of same needs to be reviewed by the audit committee if it is properly utilized or not. Any impacts of the merger, demerger, amalgamation can be considered at the audit committee. Other than these things, audit committee is mandatorily required to review these following informations, which is related to the, as we discussed, appointment removal of the CFO, any internal audit reports, which is related to internal control weaknesses, many management letters, which has been issued by the statutory auditors, management discussion and analysis of financial conditions. If there is any statement of deviation with respect to the quarterly quarterly statement of deviations or annual statement of deviations. These deviations, statement of deviations are required to be reviewed by audit committee mandatorily before submitting to the stock exchange. Now we will discuss about the related party transactions and the related party so here we are going to cover the related party transactions and its relation with respect to the audit committee only.
Sakshi,
Yes, sir.
you actually touched upon about the internal control and the internal checks actually. In fact, what happens is in the director responsibility statement, this is one of the statement category the board of directors made. They have put in system with the internal control to the business, take care of everything. The system in place, that statement has to actually come from the board of directors in the responsibility statement. That is number one. Actually, audit committee reviews because the internal auditor directly report to the audit committee. Any finding, etc. That is one thing. And second thing is even the internal auditor, actually they collaborate with the external auditor. External auditor actually take the internal audit report, go through things, they have the joint discussion. That is another thing. And apart from that, even the statutory auditors also required to make a statement in their Caro report. Earlier it was Macaro, now it's the Caro report on this particular aspect of the internal control, the internal check. Definitely the internal control, the internal check is one of the things which is very, very important actually here. I would ask Valerie to share her thoughts on this internal control aspects of it.
No, I think you validly said, sir, that internal controls to be reviewed, and while it is the board's also responsibility to confirm it through the responsibility statement, as I mentioned, the role of audit committee is here as a 4I principle. So they are here to evaluate it in depth and understand, and their recommendation or validation is supporting the board in terms of confirming the director's responsibility towards the internal controls. But I think these days, this is also the responsibility of statutory auditors to evaluate, and it comes out in the Caro report if not validly followed. So therefore, the discussions between the auditors and the audit committee, and specifically highlighting if there are any weaknesses, is more and more relevant. How exactly the auditors also then are responsible to evaluate it in terms of the audit standards, and that also they need to comply with their own professional code and standards and the practices which are required for review. So that's how I will say that it is relevant, important, and the audit committee's role here is to support the board in terms of validating the or confirming the strength of the internal controls or ensuring that the systems are in place.
In fact, I have seen in some of the balance sheet of the companies, I don't want to name them, that disqualification made by the statutory auditors is not on the financial and the financial notes, etc. and all this thing. It is basically the company did not have the adequate internal control checks and systems. Those sort of the disqualifications also, I said it was been addressed in the board report actually. Yeah.
Right, sir. And I think
In fact, the audit committee should, sorry, go ahead, Valerie, sorry.
No, sir, I was just saying that as you also rightly said, that the role of audit committee or the auditors is to ensure that those controls are identified, not just for a short-term solution, but to ensure that in the long run they are taken care. So the root cause analysis there is also relevant from both the auditors as well as the audit committee. And I feel here the understanding of business also is important, because then they can kind of give effective answers to build those checks and balances to ensure that these probably, if there are any weaknesses or failures, they don't repeat. That's all. Over to you, sir.
See, what I would like to say is the weaknesses in the internal controls, if any, unless they're like termites. Okay, once the internal control weakness, if it gets into, it is very, very difficult to control it at a later stage. That's why at the inception stage itself, the internal control should be strong enough. And at the same point of time, they need to be reviewed periodically. And what is the periodicity? It depends upon the company. So that apart from the internal controls, then the question of this that accounting standards and all other things will come, accounting policies or whatever it is. But internal controls are very fundamental. And in fact, if I am not wrong, the listed companies have to also have that auditors have to review and verify and certify the internal controls. As far as the unlisted companies are concerned, they are not required. But I always advise that even in case of wherever the act or the regulations say it is not mandatory for the other companies, it is not necessarily that you can have a sigh of relief. Okay, it is not mandatory for me. Wherever the good points are there, you can have to institute in your
Technical issue.
We lost him.
I think I'll continue his point, and it's very well valid that not just the listed companies, but companies should ensure there is checks and balances, or rather a check by auditors on the internal control systems, more predominantly based on the size and scale of the operation, because probably the smaller companies may have the basic basic checks in place and the auditors are validating. But a detailed review is certainly recommended based on the size and scale of the operation, not because it is listed or unlisted. And that is something I think I'll just continue on this point. So, sir, we were just continuing your point on the internal control system.
Yeah, yes, Sakshi, go ahead.
So I think Sudhakar sir, you're on mute.
yeah. Breakdown. I couldn't join here. Yeah. Go ahead, Sakshi.
So now we will understand the requirement, the responsibility of audit committee with respect to the related party transactions in a company. We all know that the audit committee is required to give the omnibus approval for the transactions happening in the recurring basis in a company for that particular year. However, there are certain transactions which happens with the related party of the companies which are not mentioned under Section 188. So those transactions which are not the related party transaction as per 188, but are still with the transactions with the related parties of the companies, the prior approval of audit committee is required for such transactions. So the audit committee shall give the omnibus approval, which we have discussed. Then the audit committee is required to give prior approval, or if there is any subsequent modification in that particular transaction with the related parties. And in case the audit committee does not approve that particular transaction, it gives its recommendation to the board. However, if there is any transactions which is up to rupees 1 crore entered by a director or officer of the company without prior approval of the audit committee, that particular transaction can be ratified by the audit committee within 3 months from the date of that particular transaction. However, if the company fails to get that ratification from the audit committee at its option can consider that particular transaction as voidable. And those particular directors need to indemnify the company for the losses which has been made to the listed entity. That is a listed entity requirement, which I'm going to discuss in detail later. So this is as per the Companies Act 2013. And prior company.
One thing people are should be by point. Times people used to say, I will get it ratified from my audit committee. Please don't have this thing. This is actually that ratification has been given only in case there are certain difficulties in obtaining the prior approval. Only then ratification is possible. And similarly, audit committee members also should not ratify every transaction. They have to ensure that all the transactions should have their prior approval. If at all anything comes for ratification purpose, immediately जैसे हिंदी में कहते हैं ना कान खड़े हो जाना चाहिए उसका. That is very important for them. Under what circumstances, what was the urgency, what was the difficulties in obtaining the prior approval? Because if you see that 188 requires the resolution or the approval of the transactions only at the board meeting. Under 177, it is not so. That doesn't mean I'm not advocating you can take the approvals by circular resolutions. Because related party transactions, I always advise the audit committees never ever give the approval by circular resolutions. However, in case of urgency, they can always give such approvals by way of circular resolution. So the question of ratification should not come in the first instance. If at all it is there, with proper justification, and also that audit committee, while ratifying it, it should caution the management that in future this kind of things should not happen. Yeah. Valerie, you want to say something, I think.
Absolutely, sir. And I think this is a very valid and practical point, because many a times the business functions come to the company secretary saying we have to enter into this transaction and can we go ahead? And our answer has always been that if there is a prior approval required, you cannot start the transaction unless the audit committee has approved. So get us all the valid information, place it before the audit committee, let the committee decide. Now, circular resolution is a possibility, and I would say practically we have exercised only in case of probably the incremental amount, or let's say the main machinery was purchased and then there was a spare part which was required. So the basic transaction was reviewed by the committee, and only then certainly for some additions we have gone for circular resolution. I think in today's world, holding a meeting through the virtual mode, video conferencing is not very difficult. So if you really need any important transaction to be approved by the audit committee, it is very well possible. You can check with the concerned business functions, get all the information, get the audit committee members' time and get it approved if it is so urgent. Only exceptional circumstances, and which is where I think practically it has been provided. One more aspect I will probably say that where the ratification could be relevant is because sometimes the person who's carrying out the transaction does not know that this entity is a related party and hence may miss out the prior approval. Now, this also can be circumvented or prevented by adding a check in the system itself, which is what we had done in the SAP. All the related parties, we had put a tag. So if the finance function or the purchase function is putting any order for that entity, there will be a pop-up that have you taken a prior approval of the audit committee. So this is possible. Of course, these kind of methodologies or the learnings we have to implement, but only maybe in a very rare situation, there is a new related party, which probably it was not known during that period and hence the transaction was missed and the ratification is required. But as Sudhakar sir rightly said, it is only an exception and the committee should highlight and make sure that no such ratification with the same entity and same transaction absolutely not permitted. It can only be a one-off situation and not a norm. So that is something that the committee has to ensure. Over to you, sir.
And one more aspect is that, as we all know, the repetitive transactions and most of the time the revenue transactions, the audit committee can give the approval on omnibus basis. Question comes, in fact, in the chat box also I have seen one question that whether the omnibus approval is to be taken for the from the audit committee. It is in the first the audit committee meeting of the financial year. Answer is no. You have to ensure that omnibus approval is taken from before 1st April of that particular financial year. So most of the companies do is, as Valerie has mentioned, that audit committees, they hold a meeting in the month of March. One of the reasons for that is to approve of the related party transactions on omnibus basis. Suppose if we are not going to have that, in fact, in some of our group companies of Reliance, what we used to do was the January board meeting itself, we used to have the audit committee, the omnibus approval from the audit committee for the next financial year. In fact, as put in the chat box, I will get it ratified. Ratification is not provided for these kind of mistakes or these kind of mishaps. Yeah.
Just add here that, even the audit committee directors, they are so responsible and so much onus on that. They are not taking this now. So don't take it for granted that, we will get approval. They are going to take to the task, and literally we have the audit committee where the audit committee has cancelled the transaction. They were so upset, nothing doing, we are responsible, you cancel the transaction. So don't take it for granted, for friends. They are individually so responsible. So now they are very conscious about their duty. Thank you.
Absolutely, you touched upon the point, Dipti. It is very, very right thing. Because as Sudhakar puts it also, the emphasis should be, your ratification should be only by exception and only in the extraordinary circumstances. Otherwise, by rule, it should be by approval only. Similarly, here when you talk about the related party transaction, because there is no point in taking the related transaction, the first board meeting, by the time you would have already entered the transaction, then the meaning of the prior approval itself is get lost. As he really said, it should be before commencing the year itself, the approval should be actually in place. That is there. Another thing is there, Valerie has given a very practical insight. That is, we take approval only, the ratification in the case of only the incremental approaches and other things. That is one thing. And second thing is nowadays, yes, I see rightly said, because of the technology, digitalization, video conferencing, it is not that difficult to get the approval. And in fact, the company secretary should be strong enough to advocate this and bring to the notice of the people, and we'll have to see that it happens that way. That is what the company secretaries should do. We should hold our bar, raising the bar always high. That's what I think so. Yeah. Yes, Sakshi.
So there is an exception from taking the prior audit committee approval if there is a transaction between a holding company and its wholly owned subsidiary. Then for the listed entities, the requirements are more stringent. I would say that all the independent directors of the members of the audit committee can only approve the related party transactions. And or for the omnibus approval by the audit committee for the related party transactions is not limited to only the listed entity. It is also covers the subsidiary of the listed entity. So audit committee requires to give the omnibus approval for the transactions by the subsidiary as well. Then, as per the recent amendment in the LODR, the remuneration and the sitting fees paid by the listed entity or its subsidiary company to its director, KMP, or senior management is not required, does not require the prior audit committee approval. However, if that particular remuneration and sitting fees is material in terms of provisions of SEBI LODR, then the prior audit committee approval is required. Also, if those directors, KMP or senior management are part of the promoter or the promoter group, then the audit committee approval is required. Otherwise, there is now the relaxation has been given from the audit committee approval. And if there is any, the audit committee of the listed entity is also required to define what is the material modification, and same needs to be disclosed in the policy on materiality of related party transactions.
Sir, here I can add that practically, I think this is one question that we all deal with. What is a material modification? And most of the times these have been learnings, and what we have seen is it may vary from the nature of transaction. So certain times it is the value which is important. So for approving the transaction at the time of omnibus approval itself, the audit committee can provide that for this kind of a transaction, what is the material modification? Let's say more than 10% variation in the value. Sometimes it depends on, again, the nature of transaction, where the terms of the transaction, let's say the credit terms or the delivery terms, could be relevant. And if there is any substantial variation, that should come back. So I think this is important. And while the policy enables the audit committee to provide and define the material modifications, these would vary depending on the transactions, is my view. Over to you, sir.
Yes, Sakshi.
So there are certain other related party transactions to which audit committee approval is required, which is not only limited to the listed entity. However, if there is a transaction to which subsidiary of a listed entity is the party, shall require the prior approval of the audit committee of the listed entity. In case if there is a related party transaction to which a subsidiary of a listed entity is a party, however, the listed entity itself is not a party, then as well the audit committee's prior approval is required for that particular related party transaction. But in the case that a listed entity has a listed subsidiary, then for that listed subsidiary, the audit committee approval of that listed subsidiary would suffice. Listed holding companies audit committee is not required to approve that transaction. And in the similar situation for the related party transaction by the unlisted subsidiary of a listed subsidiary of a listed holding company, then the unlisted subsidiary can take the for the transaction related party transaction of unlisted subsidiary. The listed subsidiaries audit committee should approve that transaction. This has been explained over here. So I'll take it in a that prior approval of audit committee is required when a transaction is between related party and related party transaction is between a listed entity and its related party. And if there is a related party transaction between the subsidiary of a listed entity and related party of a listed entity. However, if in case of a listed subsidiary of a listed entity, the RPT by a listed subsidiary of a listed entity, the prior approval of audit committee of listed entity is not required. And in the similar way, the RPT of an unlisted subsidiary, the listed subsidiary of the listed entity should approve the RPT. The ultimate holding listed entity is not required to give the prior approval for the same. Then the independent directors of the audit committee of the listed entity can ratify the transaction within either the 3 months or the immediate next meeting of the audit committee, whichever is earlier. And there are certain conditions to that a value of that particular ratification of the transaction is required to be presented, if it was material or not, rationale why it was not taken the prior approval of the audit committee, and all these details as mentioned has to be put in before the audit committee while taking further ratification of that particular transaction. And still, at the option of the audit committee, that particular transaction is voidable if audit committee does not feel that the transaction which has already happened is right. That transaction is voidable, and the directors concerned who has done the particular transaction shall indemnify the listed entity for the loss incurred by it. Now, there are certain exceptions wherein the audit committee's prior approval for those related party transactions are not required if it is between the two public sector companies, if a transaction is between a holding company and its wholly owned subsidiary, if a transaction is between two wholly owned subsidiaries of a listed holding company.
Just 1 minute, Sakshi. Please go to that ratification of the transaction, the previous slide. The previous slide, 1 crore rupees. No,
Okay.
next. No, next to this.
Next to
You are
this.
going back. You have to go forward.
Okay, sorry.
Next.
So this one.
See, here in the first bullet, the value of the ratified transactions with a related party, whether entered into individually or taken together during a financial year, shall not exceed rupees 1 crore. That means it is saying that not only one transaction, it is not per transaction, it is taking that individually or taken together is 1 crore. It is slightly different to that of Rule 6 of the, where omnibus approval can be given by the audit committee. There it says that omnibus approval provided that where the need for related party transactions cannot be foreseen and aforementioned details are not available, audit committee may make omnibus approval for such transactions subject to their value not exceeding rupees 1 crore per transaction. Whereas this is slightly different in case of listing regulations. They are not saying per transaction. They are saying that taken together, the value should not exceed 1 crore. So please, understand the distinction between the Companies Act as well as listing regulations are concerned. Yeah, thank you.
So in the exceptions, if the transaction is entered between the two wholly owned subsidiaries of the listed holding company, then the prior approval of audit committee is not required. If it is a transaction related to the payment of dues and statutory fees or anything between the one party is the central government or the state government, and if the transaction is entered into between a public sector company and the central government or any state government, then the prior audit committee approval is not required. Now we will understand the role of audit committee in the vigil mechanism of a company. So every listed entities or the companies which accept deposits from the public or have borrowed money from the...
Sakshi, 1 minute now. Just go to the previous slides.
Yeah.
Sudhakar ji, if you have a situation where you have one director who is a director in a PSU and he is also a director in some private listed company, So, and if you are doing any transactions, so you have to follow the RPT, the transaction, the approvals and all.
Well, but there was actually 1 minute interaction there in my internet. Please repeat the question.
Sorry. Can you repeat, sir? No, I think.
Yeah, what I'm saying is my internet is not stable. So can you please repeat your question once again?
So my question is, if I'm an independent director in one PSU and I'm also a director in one listed company, okay, where they are doing a transactions in both, I'm a director, independent directors. So how did this RPT transactions are applicable? You have to, it has to be routed through audit committee.
Yeah.
Okay. So those
Yes.
exams are not applicable, right? Even though one side you have a PSU.
Yeah. Even if one other than PSC is there, it is not exempted.
Okay. So when you have a two PSU, one PSU from the which is doing a transaction with the other PSU, then only this the approval is not required.
Correct. Both the parties are involved in the government, then only it is there. Otherwise, it is
then only it is.
Yeah. You are right. Your understanding is absolutely correct.
But I think it is parent transaction between PSU and central government or state government.
Yeah, any government. Any
or
government for that matter.
combination thereof on the other hand.
Yeah.
It is two PSU or PSU with central or state government or any combination thereof.
Point A says the transaction entered into between two public sector companies, so it is also exempted. And if one side a PSU and a government on the other side, then it is exempted.
In my personal view, this exemption should not be there. But of course, this is the law, so we cannot say much about it.
Some or other, in case of the public sector undertaking, they are governed separately by the bureaucratic rules. That is what it is actually happening. Even if you look at the corporate governance, etc., they have their own set of rules, whatever is there, which they are expected to follow. That is what it is. Yeah.
So even today, many PSUs does not have a woman independent director, sir. And SEBI can't touch them. So all these are applicable to all those private listed companies. Yeah.
No, it is not like that. It is not like that. See, SEBI is scaling everybody with the same scale, whether it is PSUs or whatever it is. See, PSUs are having their difficulties in complying with the listing regulations, especially in case of directors, because that is not in their hands. It is depending upon the government. That doesn't mean that SEBI initially that SEBI used to keep quiet, but nowadays, if I am not wrong, they have started penalizing the companies. Recently, I have seen one news item, one PSU was charged some 8 lakh rupees, something like that penalty is there, and then they have requested SEBI to reduce the penalty. Reduction of the penalty means what? The PSU has to pay the penalty, but only thing is they are requesting to reduce it. It is up to the regulator to reduce or not to reduce.
PSU, as you rightly said, Sudhakar, has got their own difficulties because, even if it comes to the remuneration, etc., and other thing and all, because, the managing director is ultimately reporting to the bureaucrat who's the secretary to the departmental affairs. His salary cannot exceed beyond that, although which will be falling within the limit of the remuneration things. There are so many things are there in working in the PSU company is like, like a Mahabharata. That is Draupadi having 5 husbands. It is like that. It's very difficult there. Actually, many rules, many bureaucratic, many system, many reporting. Even the audit comes to it is actually done by the Comptroller and Auditor General of India. And plus the Parliament session is there. Nobody will have a time because everybody is very busy in preparing the question answer of a parliamentary session. All those difficulties are there in PSU, as you rightly say. Yes, SEBI is some or other not taking that seriously with the PSU like any other company. I would put it that way. Yeah.
But sir, in one company where we were doing an audit, where the secretary of that particular industry, shipping industry, was the director. He was a nominee director from the ministry. Now, this person has not attended any of the board meetings. So, of course, now, of course, you have a provision which says, with or without, taking a leave of absence. So literally, I mean, he was out, and again, we have told them that, they need to reappoint him. So by that virtue of that sections, provisions, that he was automatically, he was out of the company.
Yeah. Yes, Sakshi.
Now we will understand the vigil mechanism, how it is applicable on a company, and what is the role of audit committee in the same. So every listed company and the unlisted companies which accept deposits from the public or have borrowed money from the banks and the PFIs in excess of 50 crores of rupees shall establish a vigil mechanism for their directors and the employees to report the genuine concerns or grievances. For this vigil mechanism, the direct access is given to the chairperson of the audit committee. So the committee is required to establish a mechanism wherever the person is being given the responsibility to whom the concerns would be raised to. And for that, the chairperson of the audit committee is the person. And the establishment of a vigil mechanism is required to be disclosed by the company on its website. And if there is no website, then the board report of the company. For the companies, wherever audit committee is applicable, they should oversee the vigil mechanism. In case if there is no audit committee in a company, then the board of directors shall nominate a director to play the role of the audit committee for the purpose of vigil mechanism and to whom the directors and the employees may report their concerns to. Now, audit committee also plays an important role in the.
1 minute, Sakshi. There is a very relevant question is asked. If you want to clarify, Sudhakar and Vallari, what is the meaning of direct access of vigil mechanism to chair of audit committee? I think since it was quite relevant to the slide.
Okay, so practically what it means is that the person who is raising a concern or who's the whistleblower should be able to raise the concern directly with the chairman of the audit committee. And how is that possible is because it can be through an email ID or it can be through a phone. Mostly what I have seen practically is the email ID of chairperson of audit committee is provided in the whistleblower policy. And so if anyone wants to raise any such concern directly with the audit committee chairperson, it can be done so through this independent email ID. And this can be anonymous as well, or the person can reveal the identity and discuss with the audit committee chairperson. If such kind of concerns are raised directly on this email ID and the chairperson is accessing it, then the person can reach out to the person who's raised the whistleblower and get more information on the matter. So someone may be worried about victimization or the kind of person against whom the whistleblower may be applicable and raise it directly with the audit committee chairperson.
So the question is, so an email needs to be given directly to the chair. I think you have clarified that it should be independent email ID and access should be given to chair.
Yes.
Normally, in many companies, they actually publish the annual report, the whistleblower mechanism, and there they say if you want to raise a question, these are all the contact people, these are the telephone number, these are the email ID. That is what I have actually seen. Even much before 2013 Act, where the company I was working way back in 2005 and 6 and 7, that time itself, because of our parent company wanted us, we implemented the CSR policy and vigil mechanism and etc. and other thing and all. There, what it was decided, we have after two things. One is the contact person number was given. You'll be surprised to know the first contact person number was myself, company secretary, my mail ID, my number was given. Then thereafter, it was given to the managing director. Then there was the audit committee chairman was given. Then the board chairman was given. In addition to that, as Valerie puts it, somebody don't want to reveal the name, etc., and other thing and all. They want to remain anonymous. They have also provided what we call a toll-free number where you can actually call them and register a complaint, which we used to monitor actually. So those things are also there. There are different ways of doing it. It can be done. What about your view, Valerie, about this providing the toll-free number?
See, very frankly, I have two views, because if you are providing a toll-free number, it could be a third-party service. So is it really safe to have a third-party service in case of these sensitive matters? I think having a direct access, either it is email ID or a phone number of the relevant person, is more suitable, is my view.
Okay. Sakshi, you can go ahead.
So, related to insider trading and the SEBI prohibition of insider trading regulations 2015, Audit Committee has certain responsibilities as well. So the Audit Committee is required to review the compliance with the provisions of SEBI regulations at least once in a financial year and verify that the systems of the internal controls are adequate and are operating effectively. Also, the transactions or the trading which has been done by the designated persons, for that, at least once in a year, or maybe by any other frequency, a report should be placed to the audit committee by the compliance officer to understand if there has been any trading which the designated persons of the company are doing. Also, there is a trading restriction period for the listed entities, and it is advisable that the gap between the audit committee meeting and the board meeting should be as least as possible, so the UPSI is not traveled. So in case of the non-implementation of the trading plan, either fully or even partially, there is some audit committee plays a important role over there. If the insider there has been a non-implementation of the trading plan, the same needs to be intimated to the compliance officer, and the compliance officer should put that information along with his recommendation to either accept that particular submission or reject it before the audit committee in its immediate next meeting. The audit committee is required to decide whether the non-implementation is bona fide or not, and whatever is the decision of the audit committee needs to be notified by the compliance officer to the stock exchanges wherever their securities are listed on the same day. However, in case if the audit committee does not accept the submissions made by the insider, then the compliance officers can take the actions as per the code of conduct of the company. So there are certain other requirements which is there, like as per the SEBI LODR, that the chairperson of the audit committee is required to be present at the annual general meeting of the company to answer the shareholders of the company. The company secretaries shall act as the secretary to the audit committee. As we have already discussed, that the internal auditor of the company are required to report directly to the audit committee. And the audit committee can invite the finance director or head of finance or any person representing the internal audit or the statutory auditor to the audit committee meeting to understand and have a detailed discussions about the audit processes. Audit committee should meet without the executive of the listed entities as well. And also, they are also required to review the financial statements and in particular the investments made by the unlisted subsidiary as well. Now, so we are on the end of our topic to understand if we have discussed about the audit committee's roles and responsibility and how the regulator are taking it seriously. We can see it with the case laws. We have not disclosed it in quite detail here, but we can see that for the misrepresentation in the financial statements, the SEBI has imposed penalty of rupees 59 lakhs.
Sakshi, 1 minute. Mr. Sudhakar, you wanted to say something? Sudhakar ji?
Yeah. See, yeah, I was on mute. In fact, see, what I want to say is that SEBI is very sensitive about a few regulations like your Regulation 17, Regulation 23, Regulation 30, and insider trading regulations. Their focus is mostly on the non-compliances of these regulations, and these regulations, fortunately or unfortunately, they are very, very complex. And insider trading regulations, especially the monitoring responsibility of the insider trading regulations, apart from the compliance of the board of directors. And in this case, board is assigned this responsibility to the audit committee should be well aware of provisions of insider trading. What is the how they have to monitor that apart from the code of conduct? Also, there are some sensitive areas are there which audit committee has to monitor that. And similarly, they should not hesitate while imposing penalties on the non-compliances by the designated persons. Most of the times, what happens is I have observed that the senior persons who are not very well aware of the insider trading regulations and the code of conduct, they indulge in contra trade, they indulge in the trading during the window closure period. And these are very sensitive matters, and the audit committee cannot shut its eyes for that. Whenever these kind of non-compliances are taking place, it is the responsibility of the compliance officer to immediately bring it to the notice of the audit committee. They should not wait for the next audit committee meeting. They have to bring it to the notice of the audit committee and also ensure that the issue is addressed properly, and whatever the penal actions or penal consequences are there, they are to be taken and intimated to the exchanges accordingly. So audit committee, again, when you are talking about the training aspects, at least once in a year, this insider trading regulations requisite training is also required to the audit committee in particular, if not to the board as such. Yes.
Sudhakar, you are very rightly touched upon. In fact, very recently, SEBI has actually passed an order in respect of one of the company. What had happened? There was actually some sort of acquisition has taken place by the company with the parent company's things. And what has happened is they thought it is, being a inside acquisition, etc., another thing and all necessary approval not taken from the audit committee. That is number one. Number two, during this period, this acquisition details were actually known because it was a listed company. There were some of the senior officer of the peoples. So the trading window, which was supposed to be closed during this period, because the unpublished price sensitive information was present, it was a failure on the part of the company secretary who did not do this. So these things actually came up with the SEBI. SEBI has actually taken up this matter. And ultimately, what has happened in this case, and the company secretary was actually pinned down. He was actually penalized 5 lakh rupees for this, besides not taking the related party transaction approval from the audit committee. So SEBI is really seriously viewing all these matters. There are a couple of cases which are actually coming up. Even the designated persons who are not actually following the, what you call the given plan, this trading window closure, a related party transaction, all these things are all very seriously looked upon by the SEBI, the listed companies. Yeah.
So in the case laws, we can easily see that the SEBI is imposing huge fines on the companies, and not only on the companies, it is including the CFOs and the directors in default as well. SEBI is making them personally liable for the misrepresentation in the financial statements. In one of the cases, the penalty of rupees 59 lakhs has been imposed. In another case, that the penalty of rupees 12 lakh has been imposed for misrepresentation in the financial statements, whereby the company misrepresented its financial statements by not making provisions, impairment on loans, debtors, and investments as per the applicable accounting standards, and did not make certain disclosures about the related party transactions in the annual report. So it clarifies what we have discussed, the importance of the audit committee and to fulfill their roles and responsibilities properly. However, the requirement of audit committee. So ROC and the MCA is also very active on that. If the company is required to constitute an audit committee, they do not do so. Then through this case, we can see that MCA has imposed penalty of rupees 8 lakh on the company and made 3 directors personally liable for rupees 1 lakh each. for the reason that the company did not constitute the audit committee despite crossing the threshold criteria. So I think through this, we have understood the importance of the audit committee, what is their roles and responsibilities, and how, if we don't do this, how the regulators are very actively looking into this as well. Now we can take up the questions.
Okay. Let me start from the beginning.
In fact, before you take that queries, Bala.
Yeah.
Remember that SOX 2000, Advanced Actually Act 2002 said that audit committee members are to be only independent directors. In fact, we are actually saying, short of saying that.
Your voice is breaking.
Sudhakar, if you switch off video and see if it is, because today your
SSB of ICSI
Sudhakar, your
to
voice
come with
was
the best practice.
Sudhakar, we lost we lost you in between. Maybe you can switch off your video, we can speak, and we want to hear little back.
I think he lost the connection on me.
Yeah, video is not moving.
No, my video has switched it off.
Okay.
So am I clear? My audio is clear now?
Yeah. Now it is much better.
Okay. So what I'm
No.
audit committee members are to.
Yeah.
Yeah.
Yes, please.
Okay, you go ahead. Let me change my internet again.
Yeah.
Okay. Let us start with the questions actually. In addition to the listed company, which are the other class of companies, the audit committee is a fundamental basic question. In fact, she has actually put up in the beginning of the slide itself. Very apt subject in the background of the recent SEBI interim order, which has come actually in Jensal. I think that's what somebody has shared actually. Many of the recent accounting errors and the derivatives in the losses of the Indus Bank, how panelists think about and what extent audit committee has actually failed to report such important aspect to the board with a whopping loss of about 1,900 crores were actually underreported, and consequences of the audit committee members, CFO, CEO, and the internal and the external auditors, shareholders, confidence of the shareholders completely kindly respond. I think the Indus Bank case and other thing and all, we will not be able to comment because these are all actually matter of the sub judice. On that, we cannot actually.
This is where, Bala, this is where I was mentioning that the training for the audit committee members. In fact, in the IndusInd Bank also, how much the audit committee members are aware of the accounting practices and policies. In case of Indus Bank, I don't blame only the audit committee. Of course, they have to take the responsibility, but mainly the auditors have to take major blame than of the audit committee, according to me. For a Jansol Engineering is concerned, it is virtually a fraud committed by the promoters.
Yeah, that is a clear cut.
There also no doubt about it. The audit committee members should have smelled out of course, now they have resigned, but by that time already that whatever was to happen, it has already happened. So that is a fraud, no doubt about it. But again, the same thing, audit committee, what sort of powers they have been, how much they are empowered, what sort of role they are playing. So, in fact, that Nefra was telling that audit committee members have to aware of one thing, that related party transactions are carrying an inherent risk of fraud. With that mindset, audit committee members have to examine the transactions. And infra also is emphasizing the role of the statutory auditors. Of course, though they have not mentioned, it is also important for the role of secretarial auditors as far as the related party transactions are concerned. Ultimately, if at all any fraud commits by the promoter or the major shareholder, it is only through the related party transactions. So that's why audit committee members have to ensure that whenever there is a big ticket item is there, it is advisable to get a third party audit done And unless until that is done, wherever they have any kind of understanding issues are there, they have to get more information. If they are not competent enough to approve that particular transaction because of the technicalities, they have to get expert advice, which is well within their rights. Before they give the approval, they have to ensure all these things. At the same point of time, once they have given the approval, that is not the end of it. That is just the beginning of it. Audit committee members have to continuously monitor that implementation of the approval what they have given. So the review of the related party transaction should not be a routine affair. It should be taken very seriously by the audit committee.
And the same person has asked later on the question that audit committee should have at least one member who has qualification literacy, financial literacy. And he is telling that there are 30, 35 accounting standard, how the chair, you expect them to know everything. In this case of IndusInd, the chairperson was a CA. So comment on that.
See, that is where I said, Deepti, that the training, suppose on the business domain, everybody may not be knowing everything. But when you are audit committee chairman of a IndusInd Bank, a company like a banking company, then they should know the things, okay, that they have to get properly trained on the aspects of this. That is where the interactions with the auditors, interaction with the internal statutory auditors, all these things will come into picture. So, especially wherever you are not competent enough, there is absolutely no inhibition to admit that I don't know this particular subject, which I'm supposed to be knowing it. So for that, I should get trained properly, no? See, training aspect definitely involves some kind of a cost. That doesn't mean that you will do away with the training. I am a person who gives a lot of importance to the training, and that training at any stage of our life, at any stage of our positions, it is required. So if I am a director of a independent director of a, say, for example, tire manufacturing company, and I am going to join as a pharmaceutical company independent director, these two business domains are different altogether. So I should understand the process of manufacturing, what is the wastage, what are sort of raw material is there. All that nuances I'm supposed to understand as an audit committee member. If I don't know even the process flow chart, how can I ensure that what the financials they are placing before me are accurate enough or not? I should not go ahead with just going with the. In fact, several forums I have addressed this. I also again say the same thing. When I joined as an article clerk, my principal told me at that point of time, try to see through your ears, and try to listen through your eyes. That means what? What you have been told, you should not hear that only, you have to go beyond that. What you have been shown, you should not see that only, you have to go beyond that. That is equally applicable to the audit committee members.
Dipti, when you raise the point, there are 30, 35 accounting standards are there, etc. And other thing, it's fine. But the thing is, all the accounting standard may not be applicable to a particular company.
Yeah.
That is number one. So they should actually know what are the accounting standards which are applicable to them. Out of that, what are the important things which they need to look into? That is what it is required. In the beginning, I said actually we used to call the expert from outside. We used to actually discuss these matters. That is one thing. Second thing, when Sudhakar actually touched upon that when he is switching over from the tire company to the pharmaceutical company, he should know. In fact, what we used to do, the familiarization program of the director, not only the new director, even the existing director, we had at that particular time 5 manufacturing units. Every board meeting used to be conducted in the location where the manufacturing unit is situated. We used to take them 2 days in advance. We used to organize the plant visit. We used to take them through the manufacturing process, what we are doing, what is the thing, what are the things are going, how the things are there, in order to get familiarized. So as Sudhakar puts it very clearly, it is at the end of the day, it is a training, familiarization program, understanding a thing. That is what it is actually required to be done. Yeah.
See, not only that, audit committee members have to have sufficient time at their disposal. If they think that they will attend, suppose board meeting for 2 hours and audit committee meeting 2 hours and other meetings, 2 hours each like that, they will spend 6 hours or 8 hours in a quarter. That is not sufficient. So audit committee, any independent director, especially independent directors, they should have sufficient time at their disposal. Otherwise, they should not accept. That's why in one of the forums recently I mentioned, earlier also I did that, 7 listed company directorships, though you can accept it, but according to me, SEBI should reduce that to 4, if not 3. Because otherwise, the independent director will not be able to do justice to his, okay, the profession you call it, as a vocation you call it, whatever it may be. That independent directorship, he will not be doing the justice.
So, Dagara, you're right. Touching upon the very, very right point. The commitment of the time when needed by the company should be made available by the directors. That is the need, actually.
Next question.
Yeah. So let us not talk about this Indus Bank, because there are a lot of things we have been actually discussed on the Indus Bank now. Kindly clarify under section 177 subsection 6 Audit Committee, which leave full access to the information containment in the records of the company. There are meaning of the record. What is the meaning of the record? There is a financial and non-financial or any other ancillary record which may not be falling under this financial non-financial information. I think according to me, all the directors are actually accessible to all the information which are there like any other director. Or you only restricted to financial, non-financial information? Because the financial, non-financial information is coming in the picture because it is pertaining to the audit committee. That is what I think. Yes,
No,
Valerie,
absolutely,
what
sir.
is? Yeah.
No, absolutely, sir. I was also saying the same thing, that records here may not be restricted to only the financial records, but
Yeah.
whatever relevant information that the audit committee may need, and they will certainly have access to it.
Correct. At the start of the webinar, I think, Dipti, it is actually asked you, I think so. At the start of the webinar, you asked the question where the matter has to be presented to the audit committee, but it was actually presented to the board meeting, whether it is a non-compliance or not. What is the answer, ma'am? Answer did not answer to the question. Please clarify.
Yeah, panelist.
While, as I said, I think the subset of the board is audit committee. So in an exceptional situation, if the board is reviewing and approving, it could be fine, though not a strictest way of complying with the regulations or the requirements. If the board can approve it, why not a committee is a question. So the requirement is not to avoid the board to look at the transactions, but to have a focused discussion, understanding, and in-depth review of the matter that is required by the audit committee. So only in, if at all, let's say the entire board is present, including the audit committee members, and hence the matter is being directly taken to the board, I think just a one-off situation, probably it is fine, but still, if, as I said, if the board can meet and review, why not the audit committee just before the board meeting to ensure that it is thoroughly reviewed, ensured, and presented to the board. That's my view. Sudhakar sir, if you have to add anything.
I don't agree with that. We're sorry to differ with you, but
Correct.
It is a non-compliance. You are bypassing the audit committee.
Correct.
Why you are bypassing the audit committee? It is supposed to be done statutorily. It is to go through the audit committee. It has to go through the audit committee. That means what? When you are bypassing an audit committee, means you have some kind of a malafide intention is there. No doubt about it. Board might have given the approval. See, please remember, sometimes audit committee may not approve a transaction. Still, you can escalate it to the board. Board may give it. But board has to justify that why it has not acceded to the recommendations of the audit committee in the director's report. Am I correct? So audit committee has a role to play. Board cannot step into the shoes of the audit committee and approve a transaction. It has to go through that. If it is done like this, bypassing the audit committee, it is a non-compliance and secretarial auditor has to qualify that.
I agree with you 100%, Sudhakar, because the matter is actually for the purview of the audit committee. It has to go to the audit committee. Yes, if and buts there are something is there, the matter can be escalated to the board, where the audit committee members also will be present there. Maybe at that particular time, things may change. Maybe some material information is not available, some unknown things are now known, which was not discussed, the audit committee, etc. As you rightly said, board has to give the justification if they are differing the view from the audit committee differently, depending upon what are the materiality actually coming in that case. But directly bypassing the audit committee to the board is definitely a non-compliance. That is correct. I agree with you.
But then if you have a situation where audit committee does not want to take any stand, approving or disapproving, and they say, let board directors decide. So is it a correct way of or they
Yeah, they
have
can do
to
it.
say yes or no? Yeah.
See, they can do that. Suppose, say, for example, okay, that audit committee thinks that we are not competent enough to say either yes or no. They have to escalate the matter to the board, and while escalating the matter to the board, they have to explain the justification for that.
Yeah,
Why
that
it
is
is
it. That
so?
is it.
That
Why
way,
it
they
is
have to
so?
give why they can't form
Yeah,
opinion.
that is
They
the
can't
reason.
throw onus on the board.
Board.
See, they
Yeah.
are with the power and they are with the duty. Please exercise your power. And you fail for what reason you have to tell. And why you are looking at the board at higher level, where is you can't deviate your run away from duty. And exactly, Sudhakar, this why I put this question, because we get arguments this way like anything. And I said, then why audit committee constituted? Why nom-rem committee constituted? Why their composition? Why so much thing? बॉस वो करना ही नहीं था ना, सब बोर्ड में तो है ही, वो सब बोर्ड में बैठे हैं, फुल बोर्ड सब पास कर लो. So that's why
Your,
I typically put this question, because this is repeatedly argued by the CS, but it should be this way understood that all experts are there, they are expected to review, they are expected to talk, they have to independently analyze without the pressure from other non-audit committee member being there with you. Form your independent view, throw it to the board, and then you allow the board to take a call. That is the main role of the audit committee, because since it is part of board committee, then the minutes and all that. So audit committee review is taken suggestion and board is take reverse position. They have to give the reason. This is all governance angle they have put in the compliance. Then it is also non-compliance.
Ballari,
In
so
fact,
I agree with
so
you, ma'am.
Hmm.
Yes, sir.
I have
Go
a
ahead.
situation. I have a situation where if I am a secretarial auditor, okay, of that company, and where just surpassing it has gone to directly to the board of directors. So what do I do? Should I say it is non-compliant or in my observations? Yeah, yeah, Ballari.
Yes, sir. I think the observation certainly will be there, which is why I said that if the board is there and board meeting can be constituted, why not the audit committee to have the review? And I agree with ma'am's view as well that the committee cannot in a way take a stand that we are not in a position to decide and let the board decide. They have to take a stand, they have to have their recommendation, and then maybe they would put it to the board for a final conclusion or maybe a further broader guidance. That's my view. But yes, as a secretarial auditor, this should come out as an observation.
one company has actually constituted the audit committee voluntarily, though it is not applicable to them. Whether the company has to conduct 4 board meetings in the 120 voluntary. Yeah, this I think we actually discussed.
We
Even if
spoke
we
about
voluntarily
this.
conduct, you'll have to comply with everything. Under section 176(9), what kind of the vigil mechanism is expected to be devised and installed and for board of directors and employees? If it has to be a separate department or outside agency or any other combination, how vigil mechanism department people will try and access into and will it not be breach the data security or risk of the proprietary information related to the company's business processes? Kindly throw some light.
Sir, I think understanding the whistleblower mechanism, primarily it is if we are looking at the large companies, there is at least an internal audit function which can take care of the vigil mechanism as well. External agencies, I don't agree with that. Even the earlier point that we had, that if there can be a toll-free number, my view is that this is internal information, sensitive information, has to be handled sensitively. Now, dealing with this proprietary information, now those people who have been entrusted with the role of vigil mechanism, whether it is the internal audit function, whether then with the audit committee, with the board members, they have to be trusted with this information. Of course, as I said, in case there are exceptions or rather a situation where the whistle blowing or the complaint itself is against, let's say, the managing director or the head of management, where it is directly taken to the audit committee chairperson, and here the person is an independent director, the integrity of the information of the matter is certainly ensured. That's my view.
I think in relation to audit committee, somebody has put up a question. What about the deemed public company?
If it is a deemed public company and qualifying within the framework which is, or the parameters which are given, yes, it has to be complied with.
Will this presentation be shared with the participant? We have been telling time again, the recorded webinar will be disseminated through the YouTube, which contains the PPT. PPT as such is not separately shared. You will actually have the recorded webinar, which also I already put it in the chat box. Okay. Even deemed public companies will have the audit committee. That is somebody has actually given here. Once one committee constituted voluntarily, then it has to comply with the provision that we discussed that I will not need. I do not know. Is it the maximum term 9 years? It is in relation to what? Because directorship's term is actually 5 years at a time, not exceeding 2
For
terms.
independent director, Vallari was telling, no, that keep on adding. At that time, this question was raised.
Okay.
And somebody, it's now 8 years.
Okay. Audit committee, at least one member need to be qualification of financial literacy. Please tell. There are 33. Yeah, I think you discussed this, the 33 accounting standard, other thing, and all you have actually taken it. Yeah, that is right. LODR mandates at least 4 board meetings in a year with a gap of not more than 120 days. But the Companies Act is silent on this for unlisted companies. In such a case, do unlisted companies also need to follow the minimum requirement, or can they actually hold a meeting as and when it is required?
There is no mandate of number of meetings. Again, it depends on as and when required. But if the companies need to have an audit committee, which means they exceed those thresholds which are prescribed, it's always advisable to at least have quarterly or not so half-yearly review of financials, the transactions which are to be reviewed by the audit committee. So,
as per SS1 also, there is no any provision on the frequency of the meeting. Yeah, that is right. But one thing is very clear, Valerie, as you rightly said it, in case of the listed company, every quarterly they'll have to give the unlisted review of the financial. So every quarterly unlisted companies, it is actually briefing. But in case of the unlisted public companies, yes, as and when it is actually required, that is what they need whenever the financial matter and other things are there. I think you answered that question actually.
Bala, SS1 is concerned. 1 minute. SS1 is concerned. It doesn't talk about listing regulations. It talk about the provisions of the Companies Act only. That's why for audit committee meetings, the number of the frequency of the meetings is not given. But if you see guidance note on SS1 for listed companies, we have already given that.
Yeah, the omnibus approval on the related party having the first board meeting of I think we discussed this already. PSU said you cannot appoint. That also we discussed about it. Only government PSU said that actually. Government PSU we talked about it. One company has not actually constituted the audit committee and it is not applicable, and they wanted to appoint a CFO and a CEO voluntarily. Whether they can appoint it directly by the board and they have to constitute the committee.
No, not very clear. If the company has to appoint a CFO or CEO, why do they need audit committee if the requirement of audit committee is not applicable?
Yeah, it is actually coming on NRC. It is coming on NRC committee actually. NRC. It is not the audit committee. I think he is not talking about the audit committee. He is talking. He has put a not constituted any committee. So that means he is referring that only probably. The company is not constituted any committee because it is not applicable to them. But they want to appoint the CEO, CFO, whether they can go to the board. That's what the question is asking.
Yeah. Yes.
What is the emanating direct access of the vigil mechanism to chair of the audit committee?
I think we spoke about that, sir.
Yeah, okay. A wholly owned subsidiary company of a listed entity is actually providing software services to the another subsidiary to the listed entity, but no similar transaction with any third parties. My question is whether this transaction will actually qualify as a transaction in the ordinary course of business and on an arm's length business. Therefore, does not actually require any prior approval of the audit committee.
Here, I think I have some points to add, and maybe I'm just trying to understand the question and the scenario. It could be that, let's say there are, so first of all, probably one scenario, the subsidiary itself is in the software business and providing the services, but which does not seem so if it is not providing similar services to a third party. But then it could be that within the group, only one entity is taking, let's say, the software licenses or the software business, and then providing those services to the group. One, it can be done so in the ordinary course of business because it is required for the business, but it can be at arm's length only if there is no markup or no separate charges being put on for providing these services. So that's my view, that this kind of transaction is certainly permitted, and it can happen within larger groups, that the license may be taken by one company or under the umbrella of one company, with the provision that it can be given to separate subsidiaries instead of entering into separate contracts or agreements for each of the company. So this kind of scenario may be evaluated, but I think this is too specific. If we know the whole facts, then we can speak about it better.
As in the case of the,
1 minute, 1 minute. This question is very clear.
yeah,
Whether
yes,
it is in the
yeah.
ordinary course of business or not, it is immaterial. Okay, as far as the audit committee approval is concerned, even if it is in the ordinary course of business and on arm's length basis, till this transaction requires the approval of audit committee. Because ordinary course of business arm's length is exempted only from section 188, not from section 177. Okay. Now, the question of arm's length or it is ordinary course of business or not, Vallari has already said that she requires a lot of information before determining that is in the ordinary course of business. But it certainly requires audit committee approval.
Yeah, next.
Sir, also in situation if it is a transaction between a listed entity and wholly owned subsidiary, it does not require that there is an exemption to it.
Those exemptions, whatever are there, they are there.
And they will
But
be.
in this query, those exemptions have not been given. So we are saying that it is not falling in those exempted transactions. Okay.
Yeah, next. Okay, I think there is a problem in the net connectivity. Next question is, as in the case of constitution of audit committee, sometimes company are not aware whether they cross the threshold or not. Take this question, please.
No, I think this is quite clear. The rule is very specific that the details have to be taken as on the end of the financial year. So it is not during the year that you have to look at the parameters and the eligibility, but at the end of the year, once you have the audited financial results, you will know, and then you need to take action.
Now, this is very specific about Gensol case. They are saying that audit committee, no chance audit committee know all about these transfers. I think it's an opinion. We are not taking this. Audit committee chairman to be CA to understand the financial statement, have relevant experience. Please clarify.
No professional qualification is required.
Even if not on this, what it is, Madhusri is telling, who are the persons from whom an audit committee member can take advice? Because sensitive information is shared with audit committee. Even if not always price sensitive, this may not be what the companies think.
I think, ma'am, both 177 as well as LODR empowers the audit committee to seek professional advice or external advice if there is any specific matter. So that should not be restricted, and this will be done taking into account the confidentiality clause with the relevant advisor as well.
And SDD and all that is there, yeah.
Absolutely.
In case of listed holding company, RBT with wholly owned subsidiary requires prior approval of audit committee of listed entity. Again, in case of listed holding company, RPT with wholly owned subsidiary whether requires prior approval of audit committee of listed entity.
Ma'am, as I understand the question, the exemption is for the listed entity to take any prior approval. If the subsidiary has applicability under 177 and the subsidiary has to take a prior approval, there is no exemption.
Yeah. Audit committee chairman to be present at the AGM to answer members' query. Can this function be delegated to CFO who is present at the meeting?
No.
Yeah. I think with this, we close all the questions. Anyone wants?
I can just add one point to the last question, that certainly the audit committee chairman should be competent enough to answer the questions, because those will be related to the financial statements. And practically, I have seen that the audit committee chairperson goes through the financials as well as the overall annual report also in depth to be ready for such questions. The management is always there to support with if there is any additional information required, but there cannot be a delegation of this role to answer any of the shareholders' questions to clarify.
Just
One
to
more
add
role
what you,
that,
sorry, go ahead,
yeah.
Vallari. I
No,
will
no,
add
go
it
ahead,
from.
go ahead, sir. Go ahead.
You know, what I want to say is, in case of a difficulty, if the chairman of the audit committee is not able to attend the AGM, he can depute one of the members of the audit committee to attend the AGM.
Yeah. And repeatedly it is asked that they are not, audit committee is not having knowledge, not knowing and all that. So that's why audit committee has been given full power to take outside professional support, discuss with the auditor, internal auditor, management, but you have to eat yourself. That everything will provide, but that digesting has to be done by audit committee itself. It can't be thrown an and they have to perform that duty. I think.
Yeah, no, I just had one small point. I remembered that apart from all these areas, there's one more area where I've seen the importance as well as role of the audit committee is in case of credit rating evaluation of a company. And most of these cases, the credit rating agencies have requested for an independent meeting with the audit committee, apart from the management or the CFO, and to discuss and understand the financials or the risk associated with the company. So this is also one area that I've seen the audit committee plays important role into. Yeah, that was something I recall.
Yeah,
you are absolutely right. Actually, in fact, we also done the same thing, but they specifically requested we want to spend one full day with the audit committee people collectively, and not only that, individually they wanted to spend each of the directors. That has also actually happened. That is another thing. And one more thing I wanted to actually tell at this point of time, Sudhakar said time again, as Dipti was telling, audit committee members, financial lending and all, they need to be given a training, because either outside expert, the areas which are actually concerned, accounting standard applicable to them and all the things, the training is definitely a must, because they have been selected for the particular job of performing them. They are expected to perform. They cannot say, we do not know, we don't understand. That sort of the thing cannot be there. And here I think it's a company secretary's job to ensure, to organize the necessary training, bring the awareness, tell them what are the duties and responsibilities, what is expected. I think we have to raise our bar. We need to step into, we need to do our job. That's what I would say.
I think we have answered all the question and no one has raised the hand, so we can close this. Okay, there is a question. In LODR, it is written all RPT needs to be taken through audit committee. But if holding listed entity is having RPT with only on subsidiary, then exemption is giving under LODR also to such holding company.
But yes, I mean, it's only the exemption for listed entity entering into transaction with wholly owned subsidiary.
Yeah, but they are telling LODR, this is the exemption is given. It is written all RPT need to be taken through audit committee. But we said no, that exemption, that holding wholly owned subsidiary and holding.
No. See, the law reads what are the RPT transactions to be taken, then it calls out the exemption. So as Vallari puts it very clearly, it is the listed entity, the subsidiary. You fall under the exemption, then you need not, you avail the exemption.
But sir, I'll tell you, I mean, of course, there is an exemption given. As a good governance practices, the company should not exempt these transactions as well, because the exemption is for approval, but exemption is not for reporting. So I would always say that it's better to have all the transactions to be taken through audit committee, even if they are exempted. Let it be known and reviewed by the audit committee, because then ultimately they are also required to be reported.
Rightly said. I think with this, we will close this webinar. All the questions are answered. No one has raised the hand. Valerie, thanks a lot for your inputs, for sharing all your experience. Thanks a lot.
Thank
Yeah.
you so much, ma'am.
Comment by
Thank you,
Sudhakar.
Valerie.
And
Thank you, Valerie.
Sudhakar. Thanks, Sakshi,
Thank-
for presentation.
Thank you so
Thanks,
much, all.
everyone.
Valerie, thanks for your time. Thanks a lot. Have a good weekend. Let us
Thank you
meet
so
yet
much.
another
Thank you
meeting.
for having me on these webinars, and I really look forward to great presentation, Sakshi, and all the insights being covered. So thank you so much. Thank you, Dipti ma'am. Thank you, Atul sir. Thank you, Bala
Okay.
sir, and thank
Look
you, Sudhakar
forward.
sir.
Look forward
Thank
for
you.
more.
Thank you, everyone.
Thank you.
Thank you so much.
Thank you.
Sakshi, you have done an excellent job in making a good presentation
Yeah.
very lucidly. My special thanks to you. Thank you.
Thank you.
Great.